everyone, Joe Vitale, Vitale Wealth Management with this week's grading investment market update. All information is gathered as of the week of December 2nd, 2024. Let's get into the weekend review. And we hope everybody had a great Thanksgiving and enjoyed family. So let's talk about the S&P rallied 1.08% last week, now up over 28% year to date. International stocks were mixed, and both international and the developed emerging markets have lagged year to date. And the bond aggregate was up 1.39% last week and now up just under 3% year to date. Both the 2-year and 10-year Treasury yields declined last week, which is a tailwind for bond prices. So we should start to see the bond values go up. Let's talk about upcoming economic release. This Friday, the jobs report number will be released. The October report was a disappointment, but the weakness was blamed on the one-time events like strikes and hurricane delays. Investors will look to November's report to see if growth rebounded or if the weakness continues or if we're going to get some accurate numbers, because they always give the numbers and we get a revision which is actually worse than it was supposed to be. However, we still see strong demand in the job market. There's a lot of jobs out there, but we are starting to see some softening. Market outlook as we end the year. Our opinion is that the general market trend remains relatively positive. Market data has been largely supportive of continued growth. And December has historically been one of those strongest months. You know, the Santa Claus rally, you hear this all the time. Primary cause of concern in the grading opinion is expensive stock valuations. However, valuation is not a good predictor of performance trends for the next 6 to 12 months. And if economic growth and company earnings remain healthy in conjunction with the U.S. Federal Reserve lowering interest rates, stocks valuations could remain elevated for some time. So that's what we're actually calling for. One of our analysts we follow was calling for a 6,100 on the S&P, which we're just about there by year end. Let's talk about recent activity. The Gradient Investment Tilt Series was rebalanced last week. There were no changes to model exposures, but each model was adjusted back to stated risk levels. And in the news, the Biden administration proposed Medicare and Medicaid coverage for anti-obesity medications last week. While any legislation would have to pass through Congress, additional coverage of these drugs would benefit the current leaders in the space, which is Novo Nordisk and Eli Lilly. Further, other companies such as Amgen, owned in our G50 portfolio, are testing their own anti-obesity drugs to compete with the market, as well as Berkshire Hathaway, which is owned in the Core Select. The chairman, Warren Buffett, announced plans to convert $1.1 billion of stock to pass to charities as part of his family's foundation efforts. So that's just what's in the news with our current portfolios right now. Now, a lot of people are saying, well, Joe, what's happening with the market? Remember, we're already starting to see things, the market responding. We're doing very well. It's been very well the last quarter, the last month especially, and I think it's going to continue. Now, does that mean we're always going to go up, up, up? No, but with what's going to happen with the regulations and with the lowering of the interest rates, it's very positive for the market right now, and the consensus is very positive, especially with the earnings. That could change, anything could change, but we're going to remain bullish. So that's it for this week. Thank you so much for being part of the Vitale Wealth Management family. If you'd like to get a hold of us, give us a call at 855-756-5700. And remember, hope you're enjoying the holiday and getting everything ready for Christmas this year. And God bless you. We'll see you again next week.